So what we're going to do is a very quick video here on probability, risk versus reward, and what does that actually mean? I think it's very important because it's the premise of how you become a profitable trader. The question really around risk versus reward is how many times do I need to be right to be a profitable trader? That's why people are trying to figure it out. So what we're going to do today is very simple. We're just going to have a very simple explanation of what risk versus reward is. We're going to be very basic, and there'll be another video explaining this later down the line, but right now we're just going to focus on this video, just the basics. So risk versus reward. Stop loss differential is 1 unit of risk. Okay, so how are we going to determine a stop loss differential is 1 unit of risk? How are we going to determine that? Well, by the buy price and by your stop loss price. That's how you determine your stop loss differential, okay? And that becomes your unit of risk. I'm going to go through a really simple example before we even start with this one. But your reward is measured by your units of risk. So that's how you get the equation. So let's just start with something very, very simple, okay? This is Tesla. $500 buy. Stop loss is 475. If it breaks through this level, right, I just don't want to be in it. So that gives me a differential of 25. That gives me a risk of $25. Okay, what does that mean? That means my break-even win rate is 50%, right? I go up $25, I go down $25. If I do one-to-one to one-to-one over and over again, I'm not getting anywhere. I'm not making any money. If I make $25 here and then I get stopped out for $25, I'm not making any money. And so that's why this is important, just to understand one-to-one. And you can kind of see that. I mean, if you're here, right, and you go to here, okay, and then you do the inverse, you're not going to make any money one-to-one. So your win rate on something where you're doing a one-to-one ratio needs to be substantially higher than 50%, okay, substantially higher. And I would argue that it needs to be closer to 75%. But why we're using this is just simply to be an example of what needs to happen. And this is not really a type of trade that you would want to do, and I would advise against being this active. But this gives you an idea of what 1 unit of risk is and how reward is reflected in that. So let's keep going. So as we stated here, how many times do I need to be right? Well, depends on what your reward is, okay? So this is a 5-to-1 risk-reward example. We're just going to go through the basics. An example buy price is $45.28, meaning we break this level, we're right here, and we want it to shoot up. We think this is going to happen, but we don't know yet because we're on this side of the chart. Our stop loss is 43 because if we break the pivot bar, we're like, I don't want to be in it. It could roll. I could be wrong. So my differential between these two is $2.28. My risk is $2.28. At 5-to-1 risk-reward example, a 20% win rate can be successful. And the question is, like, why? That means you could be wrong 4 times out of 5 and still be successful. Why? Because one win is $11.40, and each loss is $2.28, okay, which totals $9.12. So you're still net positive $2.28 on your units of risk, being wrong 80% of the time. And that's a really important concept to grasp. Now, what does that mean? That means that we need to be in this. Let me click on this. Oh, I wish it would work. There we go. Here we go. So this is what you're really looking for. Right here, 1140. Okay? So this is really what you're looking for, that level. And basically what you're saying is, I'm willing to be wrong 4 times in order to achieve that level and get stopped out. And that's pretty basic understanding, but you should understand this, how many times you need to be right. And just so we're clear on this, this is not a math class. I'm not going to give you the exact example of where the break even is. I want to give you an understanding of what the win rate needs to be in order to be successful when you determine what you want your risk reward to be per trade. And this is how you need to think about it, whether you're an investor for the next 10 years or whether you want to be a day trader. you need to truly understand this, because it's this basic fourth grade math that determines whether or not someone is consistently profitable, and then how they should be playing their trades. So here's 4 to 1, and we'll use this example. We break 740 on Ford. Stop loss is 715. I don't want to lose more than 25 cents. That's the differential. My risk is 25 cents, meaning if I break it, I'm on the way out. Here, a 33% win rate is successful. Okay? So I need to have a little bit higher win rate now than I had before. Why? 3 losses at 25 cents a piece, 75 cents total, right? 1 unit of risk 3 times, 75 cents. 1 win is $1 per unit of risk, net positive on this $25, or 25 cents rather. So what does that mean? So that means that I bought it here, and I am out here, roughly. So that's your trade. And then as soon as you hit this, and we could discuss that, we're going to discuss that later, if you sell the whole thing, you sell a percentage, because that affects your win rate ratios as well. But this is just the basics. So you should be able to understand this and go through it a couple times if you do not. So, and now let's just keep going down the line. Let's look at what 3 to 1 looks like. Okay. So 3 to 1, you really need to start getting to a place where you're 50%, right? Where you need to be at that coin toss level, okay? So here at 13.36, we put a $1 stop loss on it, which gives us a $1 differential. So our risk is $1. So I need to make $3 on a trade, okay? I can only lose $2, right? So I can only lose twice to have 1 win, okay? So I want to be successful and don't want to break even. That's why this percentage is where it is. I need to be in the situation where I'm doing this 50%, okay? Not the 33% level. I want to win. I don't want to break even, and that's why these numbers are what they are. So at 13.36, and I need to make $3. Well, where does that put us? Hold on, that is off. Remove this. So that would put us at roughly $3, which puts us, let's just say, here. Okay? So that puts us here. So you can see what kind of move you actually need in order to win at 3 to 1. And let's just keep going down the line, and we'll do this one last. This one to make this short and sweet. So you can see, in order to be successful, when you get to 2 to 1, you need to be at least at 67%. And we're not even getting into slippage or anything like that. I'm just giving you what you need to do to win. So at 2 to 1, $17.10 on Pac B. And I want to use this 15.85 level as my stop. It gives me a $1.25 differential. Risk is $1.25. Okay? If I lose 3 times, I lose $3.75. If I get 2 wins, I get $5. How do I get the $5? My risk versus reward is 2, so every time I win $2.50. I do it twice, that gets me to $5. 2 wins minus my 3 losses gets me to $1.25 per unit of risk. So by just looking at this, it should give you a general understanding of where you need to be and why it's important for you to understand where your stop losses are and what your reward needs to be in order to be a profitable trader. Any questions, simply message me. And as always, consider subscribing to the channel and turning on notifications, because there will be more videos like this.